What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is February 26, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to go over the price action in the indices. We'll go under the hood and check out our sectors and style factors, some of the trades I took today, and then we'll wrap up with some options order flow. But before we jump in, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters, and last but not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right into the price action for today. And today was definitely another expectation breaker. So if you watched yesterday's recap video, I talked about how, for the S&P 500, I had sort of like a line in the sand level. We've reached that level, and I essentially, brought myself to 90% cash in my trading account. And at the time, it was a tough decision to make in terms of taking all that risk off. But definitely today, I'm glad that that is the decision that I made. We had the S&P 500 finish down 0.52%. We had the NASDAQ QQQ finish up 0.42%. We had the IWM small caps finish down 0.14%. And we had the Dow Jones finish down 1.44%. So I would definitely say the price action across these four headline indices I look at is pretty wonky. It is all over the place. So we'll jump right into it. Let's take a look. So we have our S&P 500. And you can see that yesterday we closed within the monthly value area. And today, once again, second close within the monthly value area. So you can see here, we auctioned all the way up to this 5-day exponential moving average. And we failed up there. And then, we auctioned all the way to the point of control at about 37.86. And some dip buyers came in. So we ended up closing just above the 50-day simple moving average. But if you look at this price action, this was definitely, pretty tricky to navigate. And that's why I'm glad I came into today's session, just with a lot of cash on the books. Because I felt like in the past week or so, I felt like I was too heavily exposed, and it was a little bit more difficult to really think objectively about what I was seeing. So that definitely helped a lot this morning. So let's see. We'll pull up our hourly chart here. Yeah, and then we will go through the other indices because it's kind of weird. Like we had Dow Jones, down huge, small caps not really even down at all, and then the Qs were actually up on the session. So really interesting action. So yeah, if we take a look here, you can see. So this was when we had the almost like the fake recovery of our upward trend. Weekly value area here, and we just couldn't hold it, and we ended up cascading down. The line at that 38.80 level, that was my line in the sand. Essentially, like cut bait and took off a bunch of positions. Really, throughout the end of yesterday and today's session, we've been chopping around in a pretty tight range here. So you can see, there's been a couple times we've explored towards the upper end of this range, and we continuously are just wicking out and sellers are coming in. But then we're hitting the lower end of the range, we're also wicking out and buyers are coming in. So it's a little bit uncertain as to next direction. In the short term, we are in a downtrend, but we're really just chopping around sideways here. And we actually had, you can see, if we look at today's action, in the pre-market we were up. So it was like, all right, maybe we're having a recovery here. Then pretty much as soon as the market opened, we had a pretty big drop here. So you can see the long wick here. This was the drop. We went all the way down to 37.84. When I saw that, I started looking at the tape to see the option flow. One of the things that I noticed yesterday was no one was buying puts. I didn't really see any big $1 million plus put orders coming down. And sort of the way I interpret that is like, this is just my personal opinion. It seems like we've been in such a nice bullish trend in the markets really since coronavirus, since that coronavirus crash. Let me just zoom back out. And throughout 2020, one of the things I noticed with my trading, just what I heard talking to a lot of different investors and traders, is everybody was like, oh man, I sold too early. I should have let my winners run longer. I shouldn't have hedged so much. Those were sort of like the big problems people had in the year 2020. So I think in 2021, people are sort of this mindset of like, oh, the market can't go down. Like the market, we're still in this uptrend. Like the biggest mistake I made in 2020 was buying puts. So like, I'm not going to make that mistake again. What I notice is as we're having this red price action, it's like a game of chicken where no one is budging and no one is really buying the puts. And that's what really made me cut bait yesterday. I just wasn't really seeing any indication of fear. This morning, I definitely saw more fear in the marketplace. So if we take a look, I'm sort of going out of order here, but I think it makes sense to. So if we look at this options order flow, so mind you, like I'm sitting in cash this morning. Really what I was doing was looking for relative strength names and really names I would like to re-enter. And when we got that little plunge, I was like, oh, okay, this is definitely going to be at least some sort of washout. And you can see we started getting a little bit more put activity in the morning. So we had some Tesla puts go up, some IWM puts, and it just looked like a little bit different than what I was seeing yesterday. Like you can see these are like $5 million orders for IWM, like an 3.4 million, 4.1 million, 2.4. Yeah, and then if you look at these, they kept coming in more so than usual. So for me, I was like, this seems like a pretty good opportunity. I'm going to add some risk here that I took off yesterday. So that's what I did. I added some risk back in some of my favorite names. And we'll have to see what happens. But yeah, I definitely noticed, at the moment, this doesn't, it's certainly not pretty. But at least we're starting to get some of that fear coming into the market. So if we look at the Qs, you can see the Qs actually got a bit of a bounce today, which is also, pretty good. It didn't hold most of the gains, but still positive. The Qs are definitely on watch for me if they break this value area low. It wouldn't surprise me, like, as we get closer and closer to reopening, more Americans vaccinated, the stimulus bill. It wouldn't surprise me if the NASDAQ ends up entering some sort of like more intermediate term downtrend, and we give back just some of what we picked up in 2020. It's not like it really has to be like a ton, but just some sort of pullback. So I'm going to be looking to see if the NASDAQ can hold these areas. But yeah, you can see it had a little bounce today at 0.42%. IWM continues to lead the market. You can see this one, it's not even in that monthly value area here. So this one still looks pretty intact. Technically, also put in a red candle, tried to make it up to the 20-day simple moving average and really just couldn't get it done. The Dow Jones, I think, was the most surprising, including for myself. Dow Jones really just gave up. Here it looked like, okay, the Dow Jones is breaking out. And then just two big red days back to back. And I'm just going to pull up my heat map here, and you'll probably get a better idea as to why the NASDAQ the Dow Jones was weak. So if you look here, today was sort of like opposite day, where in the past really 2 weeks, we've had really nice runs in pretty much everything except big tech. Today was sort of like the bounce day where big tech got its bounce, and then everything else gave up some, and there was some profit taking or, just some risk off in a lot of these other, more like old economy, cyclicals, reopening type trades. So yeah, Dow Jones is a little bit weaker. Let's take a look at our sectors and style factors. And you can see here, pretty much a lot of red across the board. Yeah, we're starting to see a little bit of green though. So we had energy down 2.37%. Regional banks down 2.31%. Financials down as well. So pretty much everything that's been leading in terms of momentum took a little bit of a hit. And then, yeah, you can see the leaders for today's session are the names that have, the worst sector momentum. So this was definitely, the quintessential bounce day. Then you can see the semis are pretty strong too. If we look at our style factors here, pretty much all red except the growth and momentum names caught a little bit of a bounce. And if we take a look at some of my trades for today, like I said, I was trying to selectively add back some risk because it looked like, as I said earlier, we're just getting a little bit more of that fear coming into the market. So the first stock that I added back was Digital Turbine. So I bought back Apps common shares. I took them in the pre-market. I saw there was some news about they are making an acquisition of this company, Ad Colony. So I did some digging in the pre-market about the acquisition. And to me, it seems like, okay, they're paying $400 million, not too bad. I was looking at how they were financing the deal. Everything looked pretty good, and the acquisition definitely made sense. So I was like, Digital Turbine is a name that I already really like. Making a smart acquisition this morning. So I bought back the shares for like $73.50 in the pre-market. This one ended up, having a really nice day. So one thing I was talking about with Pristine Capital members is a lot of these names that are super beaten down now and super oversold, if there's like a really nice headline about them or, a nice earnings release or anything of that nature, that can really, sort of like revive that name and bring it back from the technical graveyard, so to speak. So that's sort of what happened with apps today. But I added a couple things. So I added this stock DMTK. This one really didn't work that well. This one just, it's still holding its technical pattern. But this one, at least on day one, down 6%. We'll have to see. I'll probably give this one some leash to the 20-day simple moving average and just see where it goes. But I do like the base this one is putting in. And it's really been range bound for the past couple weeks while the market has been, super weak. So I added that one. And then there were some areas where that was another thing that was a little bit more comforting in terms of the risk assets where there were some stocks that were really moving today, despite the risk off nature of some of these other areas. So let me see. My toss looks like it wants to give up here. But, so for instance, let me just close this out. Wait for the program to respond. So for instance, one of them is Expedia. Expedia is a name I had some July calls in. And I closed those out maybe 2 days ago. And Expedia, it's not really pulling back. It's just having a little consolidation here, even though the market has been, pretty much a lot of stocks blowing up, a little bit weak over the last 2 weeks. So Expedia I really liked. I added some common shares there. I added some Vuzi. This name has really been intriguing me for the past several weeks. And Vuzi, it's another one where you wouldn't really even be able to tell if the market's been very weak. 'Cause this name's really just, for the most part, been consolidating sideways. So Vuzi, they do the augmented reality glasses. Added some exposure there. And for these, since the market's pretty tumultuous, I'm just trying to go in with a reasonable size, just in case, the market really spills over, it's not that big of a deal. Block, the blockchain names, they're holding this 20-day here, so I'm giving this one another shot. We'll see what happens there. And I added some Carnival Cruises as well. Yeah, Carnival, this name just looks fantastic technically. This one, a lot of these names, they just look very strong. And there was another one that I was thinking about adding. I didn't end up adding this one. But TripAdvisor. Oh my God, this one is up on stilts. So this went up 14% today. So what is that telling you? To me, it's telling me even though the market's pretty volatile, even though the tech companies are doing this, these tech names are literally breaking down and starting a downtrend here. There's other names that are really beginning an uptrend. Or who knows, they're in an uptrend. But that's the thing. Like, if we flip back to the Qs, I think, and that's why this month has been a really challenging trading month for me as well. Definitely learned a lot this month. But I would say one of the things that I'm thinking about heading into next month is with something like this with the Qs, where they really just fall out of bed, they break their trend, the whole 9 yards. I think a lot of players just come in and they buy the dip. Say for the Qs, like, I'm buying the dip, I'm going in, blah, blah, blah. Because everyone has that expectation, like, oh, it's going to go right back to the highs. But I think we have to remember, like, things are definitely changing with this market environment. So, like, the economy is reopening, inflation expectations are higher, yields are moving higher. Things are changing in terms of the setup. And I really think the setup that we were in, where it was like, okay, we're in a weak economy, so we're just going to keep pumping stimulus. Inflation expectations are super low. We have a good excuse to keep yields, on the floor. That was sort of like the ideal environment for technology. That's not me saying technology isn't going to do well in the future. Like, innovative technologies, I think, are always going to do really well. But just as like a sector, as a style factor, that was like the ultimate tailwind. And now what's funny is, like, if you think about it, the market's had this turbulence because the economy is getting better. That's what I find almost like comical about what's been happening, where pretty much like, we went through this whole pandemic and we had a rip-roaring bull market because we had these really accommodative conditions. Now that the economy is reopening, it's like, okay, we're adjusting our expectations higher for growth. That pushes treasury yields higher, which is wreaking havoc on some of these areas. So it's funny, like, the fact that the economy is could be moving into like a recovery phase is actually like harmful to some of these areas. So like for the Qs, I don't think I'm going to step in right away and just like try to buy everything that's tech. That's why, like, as I reallocated capital, I made sure to get some of those areas that are going to benefit from the reopening. Some other trades, just real quick. I did some options trading as well. So I put some exposure on in Disney. Disney, I was able to catch. This was definitely my best trade location for the day. Disney, I essentially like bottom ticked this one right on the 20-day simple moving average. This one is in a really nice trend. And, for me, I'm like, it's in a bullish trend. It's one of my favorite recovery names, and it's pulling back. That's really where I want to pull the trigger. So I was able to get into some calls here for April. And, yeah, we'll see what happens. This one recovered pretty nicely. We'll have to see if it, just resumes the trend. Starbucks, I took some April calls in as well. And Starbucks just had a really nice day. This is another one where, like, you would never really know that the rest of the market was super weak. Yeah, Starbucks, I wanted to at least monetize something. So this one I ended up closing out towards the end of the day. I entered those for $4.90. I closed them out for $6.20. Baidu, I took some calls in as well. Baidu is a name that I traded quite frequently towards the end of 2020, and it was definitely one of my best names to trade. Baidu saw some big call buyers coming in on the tape to defend this one, so I added some calls for May here. We'll see what happens. This one, if it breaks below this, low of the day here, that's when I will take my stop and exit. This one is definitely more of like a riskier buy the dip type play. But the one thing I'm seeing, I continue to try for these Chinese names. K-Web has essentially had a complete washout. So this one, we can't see the Bollinger Bands here, but this one is essentially trading towards the lower Bollinger Band. So I'm like, you know what? This is one of my favorite areas, and I'm going to try for one of my favorite stocks in that area. So I went for Baidu. MSOS I added back on. And this one, again, it's one of my favorite areas and a trend that I think will continue in 2021, with cannabis legalization. The funny thing is this YOLO ETF is outperforming. This is the one that has the Canadian names in it. So like this one actually finished up on the day. But I really think as time goes on, this United States ETF is going to start outperforming the YOLO. Because those cannabis companies in Canada, they're really not high quality at all. They really don't generate that much in terms of cash flows. So yeah, I transitioned over. I had some, calls in YOLO that I put on back in like October. Those worked really well. Now I'm trying to do something similar, but with the MSOS. And then I closed out ESTC. I tried sort of like an earnings trade. This one didn't really work. I closed this one out. This one, yeah, and this is another one where it sort of just got caught up in that tech wreck here. So that's what I mean, where like something like ESTC or a lot of these other companies where they just look completely broken. These are not the names I want to trade at the moment. There's always like buying the dip and but it's so oversold and whatever. Like ESTC, for sure, looks very oversold here. But I definitely want to see moving forward, it at least like recovering some levels, some nice green candles for stocks like this. Like I want to see that other buyers are coming in alongside me. Same thing. One of our members was asking about this ARK Innovation ETF today. And I'm a long-term bull on this ARK Innovation ETF. Throughout 2020, I was buying this thing on essentially every correction. Now it's just doing something a bit different here. So you can see like it is very oversold and it's not really getting much follow through lower than this. But it's not really in an uptrend anymore. So I definitely just want to respect the fact that it's not in an uptrend. Who knows? For all I know, this is probably like the best opportunity to buy ARK now that a lot of the euphoria's come out of it, all that stuff. So this is one that I'll definitely be watching, but I want to see a little bit of strength first before I really like dive back into this one. Same thing with Tesla. The ARK chart is going to look very similar to Tesla. Excuse me. Because Tesla is the biggest holding in the ARK fund. So yeah, Tesla was an amazing asset in 2020. Now it's broken its trend though. Looks a little different. So I think, as we enter a March trading, there's definitely a lot of improvement areas for me. But one thing I'm going to be focusing on and just being cognizant of is I want to trade the setups that look like this, like Disney. And I want to make sure that I don't chase after some of these other names that like, oh, well, this was a really good stock. Or like, yeah, this was a big winner. Because one of the things I notice can happen to people, like, say for Zoom. I'm going off on some rants here, but definitely think this is useful. So like for Zoom, Zoom, the pandemic starts, this thing really goes on a tear. And yeah, this is back in March. Zoom is trading for $100. I specifically remember when this thing was trading for $100. And I remember being like, oh yeah, it's gone up so much. Like, I don't want to buy Zoom or like whatever. Like, who knows? Yeah, whatever about Zoom. Zoom ends up becomes like a generational stock where it just like 5x's over the course of the year. And it's just, this beast of a stock that just doesn't stop for a long time. Then you can see at some point it stops and it's like, oh, okay. We're correcting here. And I know like some people, they'll go oh my gosh, like I want to buy Zoom. Like look at it. It's so much cheaper than it was up here now. And so like they'll buy there. And then it just doesn't really do anything for a long time. Like it just sort of stays in this sideways to downward trend. So that's the thing with these stocks that are really like in strong trends. Like, if you're not willing to buy Zoom at, $150 on the way up, you shouldn't really be, totally down to buy it for like 400 on the way down. You know what I mean? So that's something I'm going to be focusing on, just making sure I'm not really getting trapped there. And if we take a quick look, this has been a long video, but I just want to take a quick look at some of the other options order flow. And you can see, like, talk about the capitulation. Look towards the middle and the end of the day here. So we have the IWM puts, more index puts. They're buying puts on Amazon. Carnival, they're buying calls in. Super bullish on the recovery, I guess. Airbnb, also some calls going up. Airbnb had some earnings and a really strong reaction to the earnings. Nice green day for that one. But yeah, you can see just a lot more. This is what I wanted to see. And then right on the closing bell, they're coming in with a lot more SPY puts. So we'll have to see what next week brings. And I just want to stay open-minded for everything. Luckily now I have more cash in my portfolio, so I can do that. Yeah, we'll have to see what happens. Monday is going to be, a brand new month. So there are the first of month flows. And a lot of times that can result in, buying pressure in the market. There's new money that is being put to work. It's not like it happens every time, but I do notice that the first day of the month oftentimes is very bullish. So that's why I wanted to add at least some exposure on. So if you look, like this was January 29th right here. And it was like, oh my gosh, GameStop financial crisis. The world's ending. And then February 1st, boom. We just leapfrogged, right over the high of the day here. So we'll have to see what happens. But yeah, definitely, tough trading environment out there. But yeah, we'll get through it. We'll see what happens here. But that about does it for this market recap video. Hope you all had a great trading day and a good trading week. And I will see you all on Monday.